Hey traders, Raghee here. I'm not able to hang out with you live for charts and coffee, but rest assured, it's about 10 minutes to 7 Eastern. Got a cup of coffee at my desk, and I thought, let's go ahead and take a look at some symbols together. And thank you as always. If you have any questions, feel free to leave them in the comment section below. I can and will see them. So let's go ahead and kick this off. The focus is going to be earnings. It's obviously 2.5 hours before the bell rings, and normally I want to make assessments about what the day is going to bring once we hit the 30-minute mark before the bell, hence the typical timing for charts and coffee. But since it's 10 minutes to 7, I thought I'd talk about two big topics here. One, let's get into earnings. Let's talk about Microsoft and where the window for opportunity typically is, and we'll then segue on over to Apple. And then I'll talk about the 7 to 9 a.m. day trading window, which is one of the windows that I will look at. One of really 3 windows that I will look at, and what it is I'm looking for in the morning before 9:30 a.m. All right, so with that being said, let's go ahead and jump into the first thing, and that is, obviously the big story is Microsoft, right? And we saw what Microsoft did in terms of the reaction to earnings, this move right here, and for now it seems fairly sustained. I was with the Sector Secrets Mastery folks yesterday, and I said, look, let's not presume that this move is going to hold. We'll see what happens between 9:30 and 10 a.m., the clearing tomorrow morning. But for the most part, Microsoft obviously is holding. And where we want to see this play out is over in the NASDAQ. The NASDAQ should also be moving in a way that, well, you can see it right here. The NASDAQ should also be moving in a way that respects the fact that the number 2 weighted stock in the NASDAQ, or the QQQ, number 2 stock in the XLK, right? However you want to look at this, this Microsoft move is the tail, right? The tail wagging the dog, right? These bigger groups. And that's the season that we're in. An individual stock can make that kind of impact. And so Microsoft also looking a lot like NASDAQ, obviously, or NASDAQ looking a lot like the Microsoft chart, is exactly what we want to see for that NASDAQ futures confirmation that, yep, we're rallying because a high concentration, heavily weighted stock, right, is also moving higher, and considerably higher at that, right? Okay, so when we take a look at what we have here, the question that I get quite often is, well, Rog, what do we do with this? Okay, this is going to be, let me just preface this by saying, this is going to be probably the unpopular answer. And this is going to be one that very seldom is talked about, because what happens is any number of earning sites, and I'm not bashing the earning sites. My preference is Estimize by a country mile, because what I'm able to do, you can see here at the far left, this is the Estimize website, right? Estimize. Okay. What I'm able to do is I'm able to follow the stocks that I want to follow, and it makes it very easy to follow. And then also I can look way out ahead, really easy, at specifically the stocks I want to follow, right? This is free over at estimize.com. It's going to take you maybe 10, 15 minutes to look up high concentration weighted names. You might say, okay, let's crack open the healthcare sector and make sure I'm following the high concentration stocks like UNH or Johnson & Johnson or Pfizer, right? You're just going to look, I would say start with this top 6 to top 10 weighted names, type them in, and then click follow, and you'll see I've followed all these because they're impactful to the sector. We can do the same thing with the NASDAQ, right? I know I need to follow Apple. I know I need to follow Meta. I need to follow Google, Microsoft, etc. So I'm following a curated list. I don't care what earnings are coming out. Frankly, I'm caring about the stocks that are heavily weighted within the indices and within the sectors, and that's exactly what I'm following here. All right, then we move on to the chart. And this is why I say it's kind of an unpopular answer. For most traders, and following many free services, you'll know of earnings about on Monday, you'll have a list that's oftentimes going to be tweeted or whatever. And this is what's coming up this week, right? It could be a couple days away. It could be tomorrow, whatever. I don't want to do that. I don't need to know on Monday what's coming up on Monday, Tuesday, Wednesday, Thursday, Friday. That's actually of no good to traders like myself who want to play directional debits. That means I want to focus on long calls and long puts, right? Long calls and long puts. And here's another thing, I do so in a cash account. So I'm not looking to write premium. If you're looking to write premium, if you're looking to take advantage of volatility and you want to sell premium, collect credit, right, then that couple days out makes sense because the implied volatility goes up, right? You've got this increased implied volatility. You got that percentile moving up. And what that means is these options are more expensive for people to buy, and you can potentially collect more when you sell them. Well, I'm not really interested in selling options. That's just not something that I do. So what I'll do is I'll ask myself, what window is ideal for me? Now, everything I'm talking to you all about is available over at countdowntrader.com right now. I love that Trish posted this oldie but goodie, the 642 window. We posted this here at Countdown Trader many times. It's an oldie but goodie. It's the way that I play earnings, right? And this is 642 weeks, not tomorrow, not this week, but weeks in advance. So you can check that out at countdowntrader.com. All right, back to the chart. Now, please keep this in mind, and I hope that this will help. One of the things that some traders will do, and it's not that it's good, bad, or otherwise, but they'll focus on the volatility of the event. They'll look at the hot zone, which, by the way, is just a nickname I created many, many moons ago, actually in 1999 or 2000, where I was trading Forex, and I needed to know what those scheduled high impact, high volatility events were going to be. And the calendar that I used had a little icon. In fact, it's Forex Factory, right? Let me move this clock over. It's Forex Factory, and they use this cute little icon, and it was red. And I started calling these red hot zones. And what I was able to do is remember that we all can gear up for a particular release, whether that's earnings, it's scheduled, whether that's the consumer confidence number, whether that's the Thursday advanced GDP or the Friday PCE, right? We can gear up for something. We will discount, we will jockey for position in front of an event if we know the event is coming. So it's really important that we remember that hot zones, of course, are going to be well watched, high volatility, likely high volume, high impact, but they must be scheduled, right, as earnings are. That's why I call them hot zones. So back on over to our charts and Microsoft. All right, really simple. If earnings came out, I'm going to use the drawing tool here on TradingView. I love this platform, by the way. Absolutely love it. I think for a lot of traders, even if you have another platform that you love, please just keep TradingView as a backup, if nothing else. I think you'll be really happy that you did. And there's a lot of brokers now that work with TradingView. I've got mine plugged into TradeStation. There's a lot of brokers that you can plug in. Okay. This is the I'm not going to trade Microsoft on earnings day. I might day trade it, which is to say I could be in 9:30 to maybe 11:30, but I could day trade it, okay? The 642 window is go back 2 weeks. So really simple. Go back 2 weeks, and that's going to land me on the 11th of April. This, and these two lines are going to be red, okay? Why? Because inside of this window, if we're talking about buying options, the implied volatility has gone up. They're going to be very expensive. I've lost my edge in that 2 week window in terms of cost. I may still have an edge in terms of volatility or even setups, But I'm really at a little bit of a disadvantage by being an options buyer. That's no problem. Let's go back another 2 weeks from here. So I'm going to go back basically a month from earnings, and that's going to land me on March 25, right? So I'll go to March 24 because that is where, as a Friday. Okay, so now let's just put a yellow line there. Okay. The red just reminds me I don't really have a great advantage. The yellow reminds me I'm 4 weeks. I'm 4 weeks to earnings. I'm 2 weeks to that implied volatility edge that favors options sellers. All right. The last line I'm going to place, this is 642. I'm going to go another 2 weeks, right, before this. That'll land me around the 10th, right? There we go. This is where I'll even start thinking about earnings. Gang, 6 weeks before earnings release, I'm thinking about Microsoft. Now, this is how I would frame this out. This has nothing to do with expectations. This has nothing to do with the history of earnings. This has everything to do with the now. I don't care about the previous earnings. I don't care about earnings six earnings releases ago, 6 quarters ago. Don't care. What is the structure? What is the now, right? And that's where I'll use the multi-trend. Okay. So I start looking here, and I realize, oh, this could be a daily price movement over sold buy. Okay, here's another daily price movement range. By, and this is separate from earnings, but you can see here, by the 20th of March, I've got an uptrend. The trend has gone green. I've got an uptrend. Fantastic. That means this is a buy right there. Probably the best buy of the green trend. There's 2 really nice DPMR triggers in front of earnings. We have one last, you can see how close I am to that cutoff. Sort of one little buy right here, which wasn't bad. It went from the DPMR low to the DPMR high. Okay, not too bad. A little bit of follow through the next day, a little bit more follow through. So if I focused on buying here and here and here inside the window and then stopped entering between the 2 red lines, that's 642, gang. That's what I describe in that Countdown Trader update. So here's another really popular symbol, Apple. All right, let's do the same thing. When are earnings coming out? So this time we're looking ahead, and this way you can kind of keep score at home, if you will. So I'm going to put a red line there. That's the big cup of nope, right? What's 2 weeks before that? Where do we lose that implied volatility edge for that May 4 earning? We actually lost that on the 20th, right here, 20th. So that's 2 weeks back. Drop another red line. So I'd prefer not to be entering Apple inside of this window. But that doesn't mean that there weren't opportunities. It just means we can't be so short-sighted, if you will, and just don't want to be looking so close to the release. Okay, 2 weeks before that, or 1 month before earnings, let's drop another vertical line here on the 4. I'm going to make this one yellow, right? Just like we did on Microsoft. How easy is this, right, gang? If you can look at a calendar and you can look 2 weeks before earnings, 4 weeks, and 6 weeks, that's all we're doing here. Really easy. And then if I go back and take a look, what was 2 weeks before that April 4? April 4, that's going to put us at what? March 21, right? So it's going to put us here at March 21. Okay, that's 6 weeks. That's where I even start thinking about Apple. 6 weeks. 642. So everyone see where the 642 is coming from, right? Really easy. 6 weeks out, 4 weeks out, 2 weeks out. And inside of this, I would prefer, you know what? I've lost my directional debit edge. Once again, we go to what really matters, which is what is the structure. Now, we inherited at 6 weeks. We've already got an uptrend, right? So we're looking for buys and buys only. And I'm just showing you one type of buy, which is the daily price movement range. You could be looking at lots of things. You could be looking at the 34 EMA wave and mean reversions. You could be looking for any number of setups that you prefer, right? So in this window, once we get our 6 weeks out, now I can start looking for buys. And frankly, if you were looking at the structure of Apple even before this 642 window, right, this was a buy. Okay? So there's a number of little opportunities here where we start closing in on these daily price movement ranges when we have a green or uptrend that we're just focused on the long side. And that's, some people will call that the ramp up. Some people call that the rally. Look, this is an uptrend that I want to buy anyways. I just know that there's an interesting time countdown to earnings. And that's the way I'd look at Apple. So Apple's now in that window where I'm not really crazy about putting on trades inside these 2 weeks. Okay. Let's grab one more. We've got Meta today. Yeah. Okay. We've got Meta today. And then I'll talk really briefly about intraday trading between 7 and 9 a.m. Here's Meta. Yeah. And that's coming out today. And just kind of going back in time. Right. Put a red line here. And then 2 weeks before that, put another red line in that 14-day window, which I really, frankly, want to avoid. Look, here's what's so funny. Right when everyone's talking about earnings, everyone starts gearing up for earnings inside of this 2 week window. I'm actually knocking it off. I'm thinking to myself, thanks, but no thanks. Don't want to look at this anymore. And then 2 weeks before this, or a month before earnings, now it takes me back to March. And this is where I'll go ahead and put that yellow colored line in there. So it tells you I'm a month out. And then I start looking for opportunity in Meta 2 weeks even before this. That's 6 weeks out. And that's going to put me at the 10th where I start looking for opportunity. There's your 642. This puts some lines in the road. What do I know I've already got? Much like Apple, I've already got an uptrend, gang. We're already thinking about long positions long before earnings. So whenever we can get down near or at the DPMR, fantastic. But we're looking long and long only. And then we just knock it off in this window. Look at how much follow through we had in the 6 weeks out, 4 weeks out, up to 2 weeks out. We have some nice follow through. Now, thanks but no thanks. Right? Let everyone else jockey around for position when the earnings is imminent. I have no desire for that. You might say, okay, Rog, what do we do after? Check out the free video at the Simpler Trading YouTube channel that I posted Tuesday, and you'll see it's there. And what I did in that video is talk about how long I'll wait, and that's when the dust settles. If you want a really good follow-up to this conversation, check out the video over at the Simpler Trading YouTube channel called When the Dust Settles. And it's that 1 to 2 day waiting period that I'll usually, 1 session to 2, where I'll wait for the dust to settle after an earnings release. All right, last topic for our Charts and Coffee pre-recorded. Thank you as always for being a fan of the show and a fan of coffee, right? Okay, let's jump on over to the charts. And the question is, Rog, are there other times of the morning that you day trade? Well, remember, if we're trading the pre-market, that is, frankly, a futures time. That's S&P futures, NASDAQ futures, Dow, crude, bonds, gold, a number of futures contracts. Futures contracts move pretty much 24 hours, nearly 24 hours a day. So what I want to do, if I'm going to be day trading futures, is key up that 5-minute time frame. And now my interest is, you'll notice right now, as I'm recording this, it's 8 minutes after 7. Well, if I'm going to drop lines on the chart, as we have been, this is where I start looking at my day trading window before the bell. And that's going to take me to about 9 a.m. where, I really I need to be cautious because we're gearing up for the bell. And I would say at 9:30, if I had any trades that triggered between 7 and 9, or even 7 and just after 9, I would either want to move them to break-even stops, exit them, or if I've got an opportunity to take profit, do so, because now we're going into that crazy 9:30 to 10 a.m. Clearing. So between the two red lines is that volatility in the first 30 minutes of the morning, also known as the clearing range or the opening range, the clearing period, right? So pre-market starts at 7 Eastern, goes to about 9, no more than about 9:25, and at 9:30 I got to remember, now we're going into this very volatile window in the morning. And all I'm going to do during this window, gang, is focus on futures. I'm going to focus on my hourly price movement ranges. On TradingView, I can additionally look at volume, and I can look at these volume ledges. I can look, this is actually a point of control right here. I can look at a volume ledge here. And if my volume ledges sync up with levels that I'm already looking at, like my hourly price movement range support and resistance, fantastic, right? And it's the same thing that I'll do after 9:30. It's the same setups. It's just I'm not trading stocks or ETFs or, frankly, options on either one of those. It's really a futures time to trade. Couple things that I'll note. I've got red grab candles. I'm below the 200 propulsion. Those are things that'll tell me we're slightly bearish. Are we above or below the previous session close? Things like that. But that's the pre-market window, 7 to 9, that I'll look at. All right, gang. So thank you, as always, for being a part of the Charts and Coffee Show. Thanks for punting with me for this pre-recorded show. I'll see you tomorrow live, 9 a.m. All right.